So thank you for coming in a short notice. This session is about assessing your readiness for trading. So before the market starts, we need to know whether we are ready to trade. So there is a technique I use, and then there is some preparation before the market opens. So if we don't prepare, we will lose if we don't do our homework. Just like a kid when he goes to school and he or she is not doing the homework. So uh, the result is C grade. And then the distance widens. So the distance widens if you don't prepare yourself every day for the market. And at the end of the market, when the market closes, if you don't do it, the debriefing, the end result when the Christmas comes is between the winner and the loser or the break-even trader. So I'll show you some of the things which I do. So you can, I'm sure you're doing it. If not, then maybe you get some idea. So to start, doing the homework, and or anything which is difficult is that's the thing we need to do. Anything which is difficult and looks hard and makes us go beyond our comfort zone, that's the thing we need to do. That's what I learned. So anything which is difficult, I want to jump on it because that's where I know the success lie. Because not many people are doing it. So beyond the comfort zone, that's where the edge is. So this is what I learned long time ago. I guess it came to me automatically when I was a kid. Somehow it came. So I've been doing all the difficult things in my life where others may not do it. So doing the hard work, feeling the pain, just like when we driving, when we drive. The other day, mm, the fire guys, I admire them. Uh, when others are running away from the fires, they are running towards the fire. And the other day, I just ran into them. I thought they will go on the other side, and I stopped in the middle of the road, and they came. Instead of going on the right side, I just stopped. I saw he's coming, so I stopped, and I didn't go on the right side. I thought he will go on his side, but he came right in front of me. So that was bad. So anyway, so the fireman, just like fireman, he runs towards the fire and we run away from the fire. That's what it is. That's where the success is. So beyond the comfort zone. So anything we do beyond the comfort zone, that's where the success is. That's where the breakthrough is. That's where we become extraordinary from ordinary. So if we stay in the comfort zone, we are ordinary person doing ordinary things. So it's okay, if we are comfortable with doing ordinary things, but I am not. So I work 14, 15 hours a day. I work 14, 15 hours a day. I wake up at 5 in the morning and I go to bed around 9. So I wake up at 5, I go to bed at 9, I take a nap. If I'm home, I take a nap. Otherwise, I'm doing my thing outside also. So that's what I do. I work even on Sunday right now. Um, I'm teaching. I didn't have to, just decided, okay. But I've been reading. So Sunday is my reading days and other things. And then I said, okay, maybe I can teach. So I scrambled. I said, okay, which topic I can teach? Send you the emails, invited you, and I'm teaching at 5 o'clock Pacific. I can watch Netflix, I can do other things, but I love teaching. So, and then I have to prepare for tomorrow. So here's a pie chart I got from internet long time ago. That this is a pie chart that is showing the difference between the failed traders, successful traders, and traders at break even. So there are 11.5% traders who are successful, 18.5% turn into break even, and then 70% of the traders lose money in the market. So there must be some difference between the successful traders at 11.5% compared to the break even and the traders who are losing money. And this is, I think this data was based on the 3 year of data. So it's not bad if you kind of turn out to be a break even trader after 3 years of hard work. Um, so this is not when we are evaluating the when we are evaluating our success, not only from the capital point of view, whether we lost money or not, but from what else we could have done, opportunity cost. If we had worked in a McDonald's right now, here is like 17, $18 an hour. So if we had worked in McDonald's for 3 years, we would have made that much money also, besides losing money in the market or turning into a break-even trader. So there must be something with it, traders who are successful doing things. So besides reading the charts, people pay attention to the chart. Show me the tip. If I had sent email today that I'm going to send you, give you a tip tonight, Sunday night, I'm going to show you a stock or which will which may turn out to be a winner this week. So I insert word may. So you will see I will have 500 people line up. That's the maximum I can have in my webinar, 500. So that's what the people are usually um, running after. Um, so the successful trader, they are not running for the hot tip. They're doing something else. So I show you. One of the things which I also learned is the responsibility versus success. So the more responsible you are, the more successful you will be. Same for trading. So if you're responsible, if you take action, if you're responsible for your result, you take responsibility, the more successful you will be. Another factor, the most important factor in trading is you. So capital letter YOU. That's the most important factor in trading. Behind YOU, uh, there's only one person. God has made you unique. There's nobody like you. So if we send a trade, if I send you a trade, say 2,000 members, and at the end of when the trade is closed, and if we look at the journey, all 1,000 traders will have a different result and different emotions and different thoughts and different profit levels, percentage gain, dollar amount. So different. Same trade from beginning to end. It's different. So there must be something behind you. So knowing to understanding what I'm doing different than other traders make a difference. So and so what we need to do, the best traders, the top traders, they do the self-analysis unconsciously. So 24 hours a day, we need to be aware of what is going on in our head right now. Like right now, how I am thinking. What else is going on? Is there any internal chatter going on? Is there any, I'm emotional? Am I stressed out? Am I sleepy? Did I eat heavy? I'm not in the best of my physical health. Uh, all these things, they are. Is there something else going on in my family? Some family members are affected, which they are affecting me. All this is going on, which is affecting our trading results. So people, if we don't pay attention to all this, we will lose because it affects the trading results. So we can be on the top 11.5% if we do the self-analysis consciously. So that's one of the things. If we one of the ingredients of a successful trading is doing the self-analysis consciously, 24 hours a day. So the most important factor in trading, there are three factors in trading success. One is you, which is psychology. Second is understanding the market. Third is the risk management. And then comes the technical analysis, the entries and exits and the stop loss, etc. So this is a big diagram. I'm not the psychologist. This is a big pie chart view. So you need to pay attention, do as much study of yourself as you can. And even your spouse don't know you. So even if your spouse doesn't know you and you don't know yourself don't know yourself. So seek help, see what is going on in your life, which is affecting, there may be thousands of variables affecting your trading results. Uh, so not only trading results, I've seen that different people operate differently, not only in trading but in their daily life. So the uh, the end result is mediocre or extraordinary. So this is one factor. So as a trader, another factor to evaluate is understanding of the market. Traders don't understand the market, what the market is telling us. They don't have a way or method or a way of evaluating the market. So I I'm a student of the market, and all of us should be. So market, if we understand the market, most of our trading problem is solved. So the remaining is to find the candidate matching that market, to find the trading matching that market. So the market, if we evaluate market, the market is either going up, uptrending, or downtrending, or sideways. There's a big definition of the bull market and then the bear market. So in the bear market, it doesn't mean you know in the bear market the market is not uptrending. So in the bear market the market is uptrending and downtrending and sideways, uptrending, downtrending, and the sideways. So that's a big bear market, and in between are the three different phases. And same in the bull market. So market is uptrending, market is downtrending, market is sideways. So which way the market is trending, and how do you define the uptrend, downtrend, and sideways? You have to know that. And whether it's how you categorizing it, on what time interval. Is it a major? So I categorize in three different categories: major trend, intermediate trend, and primary trend. So for me, based on my analysis, I've been doing it for last 6 7 years now. I have automated it, but it still takes time to analyze. So I analyze the market every day, 5 days a week, after market hours, and I categorize it into major trend, upward or downward, intermediate, and then the minor. So it tells me which way I need to position myself uh, during the week, next week, and I get a heads up when my minor trend goes down. That's a very short term um, indicator for me. And not only the trend, the major trend, the intermediate trend, and the minor trend. I should have mentioned. Next time I'll create another slide showing the major trend, intermediate trend, and then the minor trend. Not only we need to understand the market direction. So forget about the bull market and the bear market. In the bear market, yes, the bear market, the stocks are down 20% or more from the high, and the bull market, the market has turned upward 20% from the low. So if you are waiting for the bull market, then the bull market just started on June 8th, but then you missed out all the gains. And if you were thinking that it's a bear market and I will buy all the puts, maybe you're getting clobbered. So the money was made on the long side. Now the bull market is started. I don't know. Nobody knows how long it will last. So that's the ongoing study of the market. So not only understanding the market trend, the major, minor, major, intermediate, and minor, we need to understand the strength of the market. So what is the strength? Sometimes the market is weak, even though it's uptrending, but it's weak. So when it's weak and it's uptrending, it will your trading result will be not as you desire. When the market trend is strong or very strong, then you will see a lot of gains and quick gains. So there is a difference. A lot of gains, like 90% or 95 or 100% win rate, and the turnover becomes quick because there is a strength. So you buy something and then it goes up next day or 2 days later, and there where you see 50 60% gain in your options in the calls. And when the market is weak, you buy something, it may go up, but it will take time, 6 7 days, and then the profit percentage goes uh, not as when the market was strong. So understanding the daily strength of the market, so you can adopt a different strategy. Sometimes you have to take quick profit, Sometimes we have to delay the profit because we understand there is a strength, the market will move up, my stock will move up. So daily basis, we need to do this analysis, and I don't know how many traders do. I do that, and I provide you a report. You can sign up for my market report if you like, on annual basis. It's not good if you subscribe on a monthly basis. It's not. You need to have a longer. So this tool helps you. I give you the report every morning, so you would see what I say about the market. So understanding the direction of the market in terms of three trends. So major, intermediate, and minor. The minor gives you the heads up. There's something going on and it can turn into something bigger. Intermediate trend, when it gives me direction, that's where I position myself towards that direction. So if intermediate trend is saying upward, that's where I position myself upward. And the major trend is a major trend. So in between, there is a intermediate between a short cycle. So, and then I also understand the strength. And then there is something called volatility. So the market can be volatile and market can be normal or quiet. So I evaluate volatility on a daily basis, on a 30-day period. So, but I do evaluate on a daily. So when the market is based on the historical data, the market is volatile when the market is bearish or market is downtrending. That's where the volatility picks up. The market is not volatile when the market is going up. So knowing this, that when I'm trading to the downside, when I'm buying puts and the market is downtrending, then I know that my trade results will be, my duration will be shorter. I have to take quicker profit, but the percentage gain will be bigger because of the fear the market falls faster than when the market rises. So we know that. We also know that when the market, most of the time, when the market is downtrending, it becomes volatile. When the market is uptrending, there is a very less chance that the market will be volatile. It will be normal or it will be quiet. So quiet is means market is trending upward, but on a daily basis, it's the effect is very little. So when the market is quiet, the percentage change in the market is very little. But if there is a strength in the market, your position will hold their levels. So knowing all this gives an edge. So in trading, you're developing an edge, knowing the direction of the market, knowing the strength of the market, knowing the volatility of the market, and then you pull out after you understand the condition of the market, what kind of a market you are facing, and you will face, you expect to face in the coming week. Then you pull out your trading system, whatever it is, whether you are a visual trader, you look at the chart and then you decide, look at the candles, or you're a trend trader, you're a breakout trader, or you're a gap trader, or you're a contrarian trader, band trader, whatever is your system. Maybe you have a black box. It is just tells you buy this when I show you the green arrow, and sell this when I show you the red arrow. Or maybe you are a chart trader. You read the chart. I am chart pattern trader. I do the support and resistance analysis. I read the chart, and I have a method of seeing which stocks are moving. I do the preparation on a daily basis. I have narrowed down my focus. I cannot focus myself on 10,000 symbols. I don't want to focus myself on 10,000 symbols. I want to focus only at 150, maximum 200 symbols. So I have a basket of stocks already scanned for my trading. And I don't need more than one or two or three symbols to trade for put on the trade, because if I put two trades, I'm not going to close the same day. I'm a swing trader, so I will open for a few days. Then tomorrow I open another two trades. Then third day I open another two trades. So in 3 days, if I haven't closed any, I have 6 positions open. and I wouldn't close just for the sake of closing because the targets have not hit and I still see the potential. So I'm not closing the trade for the um, just to ring the register. So I don't do that. So when I know that I am holding the position for 5 days, 6, 7 days, or 3 days, and so I don't need to pay attention to 10,000 stocks. All I know that if I create a basket of 200 stocks, such as Apple, Baba, Baidu, Home Depot, Caterpillar, Lowe's, Twilio, and Meta, and all these, so I will find something, and as low as maybe GM, Tesla, Ford, small price stock, Riot, Mara, Neo. These are the stocks which are on the move. Uh, so if I combine these, 200 symbols. So laser focus on these 200 symbols, and something is moving. Something is moving, and if nothing is moving, then it's okay. I don't need to trade. I just monitor my open position. So knowing the market, first of all, knowing myself. So there's a big topic, knowing myself, knowing what kind of a trader I am, knowing what's going on with me in my head, in my family, in myself, being aware of the market, preparing the basket of the stocks, then applying my trading system. I'm just scanning based on the market. Let's say the market is to the upside. Then I'm just very laser focused on those 200 symbols. I don't need to look at other. If I have when the market cools down during the day, then I look at other symbols. So I do look at, but when the market cools down, and then I just calm down, and I know the market is at 30,000 feet, then I open other basket. So applying the trading system to those 200 symbols will give me something, will give me one or two trades based on what I'm trying to see that. And then I laser focus on those one or two or three symbols. So trading system. Now, a trader must have at least two kinds of a trading system. One is to the upside and one is to the downside. If you don't want to trade sideways market, I don't trade sideways market. I trade on the upside and the downside. So there's something, even though the market is moving sideways in a narrow range, there are some stocks which are moving to the upside and moving to the downside, depending on the strength and depending on the market analysis. So let's say even if the market is moving sideways, and I am my bias is to the upside based on my market study. If my bias is to the upside, I will, out of those 200 symbols, I will find something which is moving to the upside. So um, and then when the market is not the bearish, when the market is downtrending, even if the market is bull market, the market could be downtrending. So we need to identify that, because the bull and bear, there's a 20%. By the 20% in the indexes, I mean, a lot of things can happen. So when the market is downtrending, so there's a different definition for downtrending. When the market is downtrending, then I know that my if I put on the call position or long position, I will not make money. I need to position myself towards the downside. So buying puts. So then for buying puts, I would look at the chart differently. So maybe I have a trading system. I pull out that trading system for applying the trading system to those same 200 stocks. The stocks are not changing. Uh, don't I'm not even looking at the fundamentals. The fundamental is still strong, but the stock is tanking. The Tesla fundamental could be very strong, but it's just crashing every day. The fundamentals could be weak, but the stock is rising because the big boys know that things have changed. Somebody sent me email 3 days ago. I have a puts on Tesla, and it keeps going up. Uh, what do I do? So I said, I don't know. I see Tesla going to 250. It was at 180, I think 250. So, uh, uh, so there, there could be negative news, but the stock is just going up. So it's not going to work. So, so that person was on the wrong side. Trading system for the downside or for the upside, whether market is trending to the upside or downside. applying the trading system for the narrowly selected basket of stock. So it's easy to identify the stocks based on the average true range, based on the average volume, based on whether it's optionable or not optionable, whether it the spread in the option is normal, and volatility is it moves. When the market moves, they move. So all that criteria. So apply the trading system to the basket of stock. Then you select your strategy. So strategy could be the same symbol. One trader could be buying shares, another trader may be buying calls, another trader may be creating a vertical spread. So it's the same symbol depending on where the in the land what kind of a trader you are. If you are very dedicated, maybe you will buy long calls. If you don't want to spend the time, then maybe you create a vertical spread. Maybe the stock is breaking out, you create a vertical spread. Maybe the stock is rising from the bottom and you think that is a new trend, and detecting the change in the trend, you will put on the vertical spread. So I did for Tesla and Caterpillar. So different traders, same symbol, same direction, different traders, different strategy, and then understanding where the stock, that symbol is at what stage of its trend, whether it's the beginning of a trend, whether it's in the middle of a trend, whether it's breaking out, making a new high, whatever it is, understanding what the stock is doing in its trend, a different trader will adopt a different strategy. So it's the same symbol, same trading system, giving you the same direction or entry, and then you are applying the strategy. So knowing what strategy to apply at any given time, knowing the trading system, knowing the market, knowing yourself gives you the edge. So now, if we create a Venn diagram, so when we create a Venn diagram, so we take the market and we take the trading system. So if we know the market is bullish, market is uptrending, uh, then we apply the trading system. So to those symbols, 200 symbols, there is cross section, the area where the symbols are falling, matching your definition of the market from that trading system. So this is very becomes a narrow focus. So you're not trading all the other symbols which are not matching your criteria based on the market. So you're very narrow focus. Now, when you apply the strategy, so at any given time in the market, based on the trading system you have, let's say the trading system is to the upside, then the symbols come, and then you pull out your strategy, and then you say, okay, for this symbols, these are the strategies I apply. Only focus on, I'm not doing iron condor or butterfly, and I just don't do that. I'm simple, long call, long put, vertical spread, I buy shares, um, do simple stuff. I don't need to do, I don't know, I don't do the complicated stuff. It's not for me. I don't want to create 8 legs and keep managing. And so I don't do that. I just manage my open trades based on the market, based on the trading system, and then apply few of the strategy. So then your focus is even narrow. Now, if you, and then, so this could be me, just a second. So this could be me, but then one kind of a market, one kind of a trading system, one kind of the symbols. You may not want to trade Tesla because you say, no, Tesla is very volatile. I cannot handle that beast. I want to trade GE and Ford, something, with don't, or Verizon or AT&T. So I hardly trade Verizon and AT&T and GE, Ford, yes. So if we apply further you, then that becomes even narrow, very focused. So it's me or you, only you know, because you, based on your age, based on your temperament, based on your financial objective, based on your portfolio size, uh, based on other things going on. There's only one unique you. So my financial objectives could be different than yours. And a person who is 25-year old, his financial objective is different than a person who is 65. The person who is 25, he can lose all and then gain it back. But the person who is 65, he cannot risk or cannot afford to lose. So his drawdown criteria is different. His risk criteria is different, and the reward criteria is different than the person who is 25-year-old. So a 25-year-old person can the same market, same trading system. So think about this: same market going up, same trading system, which is telling you where to exit and where to enter and exit. um, so what happened? A different person, a 25-year-old person, he can adopt a strategy of buying weekly options, although I don't recommend, but weekly. I just received a call 2 days ago, and this person saying, I lost all the money because I was trading all the weekly options, and I didn't want to give the time for them to fluctuate, and all of my position expires worthless. So what to do? I mean, what to do? The issue you have, the trade can work out, and you can gain 2,000% because you bought a 50-cent option and it went to $4, and then or 50-cent option can go to zero. So if you open an account for 25,000, you're shooting for the moon. $25,000, you can take it to $100,000, or $25,000, you can take it to zero, but you don't care because you are 25. You can go, save money and then come back to the market. But if a person is 65, and even if he has $200,000, he wouldn't be trading weekly options. He may not be trading the all his money in the weekly options. He may be the same trade, same market. A different person will apply a different strategy. He will say, okay, same trade, Tesla going up. I'm not going to buy weekly option. I'll buy some shares, or I will sell some puts and collect the premium. So it's a different person. Same market, same trading system, same symbol. It's a different person who is applying a different strategy based on his financial objective, based on his what else is going on in his life, based on his portfolio size. So knowing, people don't understand this, and they just go about doing their thing. So this is sad. So this is one thing. These four diagrams, they are different feel. So my daughter, she is 9, just turned 9. So I was telling her, okay, daughter, when you turn 12, I will teach you for 2 years one thing, like technical analysis. I'll teach you for 2 years technical analysis. Then I will teach you for 2 years option trading. Then for 2 years, I will teach you risk management. So 6 years. By age 18, you will have some basic knowledge of trading. And then you go to university and you can teach your professors over there, University of, in Irvine or whatever, San Diego. So then she said, what if I don't want to do all this? I want to be animator. So these things require in-depth study in each area. And this part, the U, is a lifetime study. Market, you can, if you focus yourself to study the market, maybe you don't want to learn about the market, maybe you find some sources, you subscribe to the newsletter and you believe in that report or the analysis, then you're fine. You can do that. You can buy some trading system or learn technical analysis where you get the entries and exits, so you nail that down. Then you go and learn different strategy, you enroll in some option courses, pay big money, and they all just teach you option trading strategy, all the iron condor and butterfly, because it's mechanical. Anybody can teach all that. It's complicated, but they can teach. But when you ask them to put on the trade, they will not be able to. Maybe you learn how to put the butterfly or Aaron Kondo. So you can do that. You can learn the technical analysis, but not many people can learn even technical analysis. So market, it takes time. I spent a lot of years in understanding the market. So market, trading system, and strategy. The bigger part is you. That's where people fail. They don't um, devote time in understanding themselves. So this is a big topic. Now, so I'm showing you something. There's one thing which I do every day. So this is not I'm telling you, teaching you about you. It's not just like 0.0000001%. So in the morning when we wake up, we need to do. So there must be some what you say is a routine. So if you put a camera in my house, and let's say in my bedroom, in my office, you would see me when I wake up. You would see me doing the same thing. So I hope you do the same thing. So I follow the same routine uh, till the market starts. So takes a shower, do the meditation. It is very important to do the meditation. 5 minutes, 10 minutes. Go inside yourself. Ask yourself. Figure it out. The moment you wake up, you know what you should know how your day would be, and the result is how we feeling in the morning is the direct result of what we did the previous night. We went to bed late, we ate heavy, maybe we drank, maybe we had some stress. So, whatever it is, the result comes in the morning when we wake up. So, it's very important that before the market starts, you can rate yourself because this will have a direct effect on your trading day for that day. So, you can rate yourself on a scale of 1 to 8. This is what I learned from the expert. Rate yourself on a scale of 1 to 8. So if you rate, so let's say if you are feeling normal. So normal means, you had a good sleep, you woke up natural, not through the alarm clock. If you're waking up through the alarm clock, it means you are not doing justice to yourself. I don't use alarm clock. I wake up natural. So when I used to work for as a consultant, I had an alarm clock because I better show up at the office on the right time or I miss the meeting here and I have to commute 2 hours one way and all that. Sometimes my boss put a meeting at 6:30, so I have to leave at 4 o'clock. I have to wake up at 3. Now it's all no. And then come home at 10. No, no, I don't do all that. So I sleep at the right time, 9 o'clock. I wake up at the right time, 5 o'clock, natural. So you do that. As soon as I wake up, I rate myself. So if I am normal, feeling good, then I rate between 6, 7, and 8. Depends. Anywhere 5 is okay. Anywhere if I rate 4, I'm in a danger zone. And in 1 and 2 and 3 is really that I either did not have a good sleep at all, some stress, or I went to bed late, which I hardly do. If I go to bed late, maybe Saturday night. So Sunday is my recovery day or Friday night. Other weekdays, no. So it's very important as soon as you wake up, while you are in the bed, you rate yourself. And here is the reason. Here's the way you can do that. Meditate for 5 minutes every day before start of trading. So when you wake up, you realize that this is where I am right now. Go inside yourself. Meditation is important. Remember, you're trying to be very successful in trading. So whatever it takes to be successful in trading. So one of the ingredients is that you don't just hurry and come to the office. You wake up early and you brush, whatever, shower, coffee, milk, honey, whatever, and then meditate for 5 minutes. Go inside yourself and then rate yourself on the scale of 1 to 8. So when you wake up, you're rating something here somewhere like 5. Maybe after shower, coffee, etc., meditation, you upgraded yourself to 6 because time passed and then you recover and you say, no, I rate myself 6 now. So rate yourself on the scale of 1 to 8. If poor, then it's maybe 1 to 3. Average is 4 to 5. And feeling great in the score, the best score is either 6 or 7, not even not even 8. So the best score is 6 to 7. 5 is average, and anywhere below 4 is down the hill. So knowing, being aware of that where you are for that day will directly affect your trading result, because when we don't, if we are not uh, at the top of our feeling that day, um, human have a tendency to make wrong decisions. Cannot We cannot. There are thousands of variables in trading. There are thousands of data, thousands of charts, thousands of reasons. We cannot execute the trade the way we are supposed to. So just knowing that this is what we are, whether we are ready to trade or not. If you scored 4 or low, then you know you're not ready for trade. So try to avoid opening any new position. Just manage your open position, knowing that you are not to the level where you are supposed to. Your thinking is paralyzed. So be aware that your thinking is paralyzed, because your sleep has direct results. So then at the end of the day, you do the debriefing, which is a big process. It takes 10 minutes, but there are a lot of things to do as a debriefing, where you close the loop. So in the morning, you wake up, you do the mental rehearsal, you evaluate yourself, you rate yourself, you do the meditation, you prepare, you watch the market and get ready for the market. You have done the homework at night time, and then at the end of the day, then you can say, okay, see how did you perform during at the end of the day. How did you perform? Did you make any mistake? And if you did any mistake, then go back and see how did you rate yourself when you woke up. Was that did you rate 1 to 3, and that's why and then you still went ahead and tried to trade, open a new position. And even when you have an open position, just managing the open position, you may have exited too early, you may have exited late, etc. So all that affect even in your open position. So just ask yourself whether you perform below average or expected or above par. And if you rate yourself at 8, then, and even if you rate yourself at 8, it looks like that you should perform um, great. But there are certain time when, even though when we rate ourselves 8, we perform poorly. And the reason is, when we feel great in the morning, it has sometimes it has a negative effect. And the reason is, we become careless, we become cocky, we become arrogant. Maybe we had a great Sunday night, or maybe I mean, we are rating on Tuesday, and Monday we had a great profit. So we get carried away. So if you rated 8, and even then your result was poor, then you go back and analyze yourself. Why, when you rated yourself at 8, uh, you did poor? So what is the reason? Why did you perform poorly, even though when you rated 8? So to recap, so to recap, uh, you need to, all of us need to know you, very important. All of us need to know the market, whether the market is bull market, bear market. That's a very big definition. That's like a top um, high definition of the market. Bull market, yeah, bull market. After the market recovers 20% from the low, new bull market. And then 2 weeks later, the bull market is just start tanking. And then the people they still say, yeah, it's a bull market. And all the stocks are just crashing down. So understand the market. So define what kind of a trader are you. So then you understand the market. So for me, the market definition is whether the market is trending to the upside or trending to the downside, and what is the strength in that trend. Whether uptrending, what is the strength? Downtrending, what is the strength? And then I divided into three different categories, three trends: major trend, intermediate trend, and the minor trend. The minor trend tells me that the market has some effect which can turn into a bigger. It can give it just a little of warning shot. It makes me prepare myself that I can expect something big. And then when the intermediate turn negative, that's where I change my position. That's the time to go into cash. And when the intermediate is uptrend, that's where I put on all the long positions. So intermediate trend for me is the way to put my position. And then the major trend is something which I know that major in the market is trending for 5 weeks or more. So understanding the market, understanding the strength, understanding the volatility helps you in putting on the trade in the right direction. And then based on the market condition, you need to have a trading system, whatever it is, chart pattern, trend following system, contrarian system, whatever you do, band system, uh, you know, a cycle system, or people trade based on the sun and moon and Jupiter and Saturn aligned. And when they align or they go in opposite direction, they put on the trade and then wait for the market to move. And then it sometime it moves. Some most of the time it doesn't. So I'm not that kind of a trader where you know, I don't do those things. So trading system, you need to have at least two. If you don't have a two system, let's say you just, some traders just, they cannot visualize, they cannot trade the market to the downside. So if you cannot trade the market to the downside, and if the market is moving down, maybe you can do the inverse symbols which move up when the market is going down. So inverse ETF, you can make a list of all those inverse ETF which move against the market. So when the market is trending down, you're applying the same trading system which is to the upside, and they will be moving up. So you can put on the trades to the upside on the inverse ETF. So this means you only need one trading system, whether the market is to the upside or downside, but it won't work for the sideway market. But even in the sideway market, there are some trades which are either moving up or down. So sideway market could be weak, or sideway market could be the bias could be downside or bias to the upside, but it's sideway. So understanding that you have a proper system, which system you need to pull, then depending on you, you need to put on the strategy, what the market is doing at that time, whether the is a if the trading system says you that this symbol is bullish, so then you need to identify where in the landscape. Is it the beginning of a trend or is the middle of a trend? So if it's the beginning of a trend, I put on or in the money, one strike in the money, or I can put the vertical spread where I buy the long calls and I sell one strike, one, two strike, three strike out of the money. So I create the spread, the bull spread. So depending on where the symbol is in the total landscape. So, or maybe I am in the trade already, so I can create a spread and lock my position. So, or I close my my call position, or I sell puts, or I just buy the share. So it depends what kind of a symbol it is. So apply the market based on the market, then pull out your trading system and apply to the basket of stock which are you have already prepared. So it shouldn't be more than 200. I don't maybe 201, 210 or 220, but for me it's 200 symbols. So I just focus on my 200 symbols, and they are well-known symbols, so they move. Something is moving. If Baba moving, Baidu may be moving. If Baidu moving, Baba may be moving. Apple moving, okay, something else moving. Meta moving, okay, fine. Tesla moving. Home Depot moving, then maybe I can look at the lows, or maybe I can look at D, maybe I can look at CMI. If JPM moving, I can also look at Goldman Sachs. I can look at C, or I can look at Visa, MasterCard. I can look at Twilio, Take Two, or something like that. So if you prepare the oil stocks, so there are 10, 15 oil stocks. Um, if the oils are moving, look at which symbols are moving. So study the crude charts, understand where the crude is, and maybe you buy APA, maybe you buy SLB, maybe you buy HES, maybe you buy Chevron, Exxon. So one of those, one or two. So prepare 5, 10 baskets of oil stock, prepare some gold stock, prepare some financial stock, prepare some tech stocks, some construction stocks, some mining stocks. So when you combine all that, Amazon. So when you combine all this, there may be 200 symbols, which is enough for you to trade a week in, week out. So, and then you apply the strategy. So if your strategy is just to buy long call, long puts, then you apply that. And then you need to know, mm, um, so long calls, if I'm buying long calls, I may be buying 60 days in buying time, 60 days or 50 days. It's not because I'm buying 60 days because I have an intention of holding the trade for 60 days. It's just that the time decay is less. So people say, hey, why you buying option for 60-day time when you close this very 2 days later? You could have bought weekly option. So yeah, I know, but I didn't know that it will move that fast. And a weekly option, I'm paying rent every day. There is a, I may be right, but I will still lose. So for weekly option, I need to be right, and I need to be right quick. So because I'm not shooting for the moon, so I don't buy weekly option. So it's me. So it's me. So I'm different than someone else. So then I also do a lot of things. There's a big topic. One of the thing I do is self-analysis in the morning. I do the preparation. I do some meditation, and I sleep at right time at night. I have a proper diet at night time. I know I can have pizza. I can have biryani. I can have heavy. I don't drink, so I don't need to worry about that. And so when I wake up, I realize that this is the day I will make proper judgment, and this is the day I may make improper decisions. So I rate myself, and then based on the rating, then so because I rate myself, I'm aware. So just being aware has an edge over other traders who are not aware of. And then I just if let's say I'm really not feeling good or I'm sick, then my criteria become to survive that day, just to survive. So I rate myself, and if I rate 8, and even then if I perform poor, then I know that I was arrogant. So this is the end of this session. I hope you learned something. And in few days, I will hold another session on some other topic. And if you have any question, please send us email, and I'll see you in few days. Thank you.